Part 1. The Invisible Wall. You've done the work. You've read the books. You've watched hundreds of hours of tutorials, back-tested your strategy until your eyes burned, and you can spot a head and shoulders pattern or a fair value gap from a mile away. On paper, you are a master. But when you look at your brokerage account, it's a different story. This is the most painful phase of the trader's journey. It's the knowledge-profit gap. It's that agonizing period where your brain is ready for the millions, but your equity is still at zero, or worse, in the red. Today, we're going to tear down the wall between what you know and what you earn. We're going to talk about why being smart is your biggest liability, and how to finally stop being a professional student and start being a profitable trader. Part 2. The Curse of the Analyst. The reason you're stuck isn't a lack of information. In fact, you likely have too much information. In every other area of life, more knowledge equals more success. If you're a doctor, the more you know about medicine, the better you are. But trading is a paradox. When you are rich in knowledge, you become an analyst. An analyst's job is to be right. They look for every piece of evidence to support a theory. But a trader's job is not to be right, it's to manage risk. Have you ever seen a trade setup, known exactly where it was going, but you didn't take it? Or you took it with a tiny position because you were scared? That's the curse of the analyst. You are so afraid of being wrong because you've invested so much time into knowing that you've paralyzed your ability to execute. Part 3. The Anatomy of a Knowledge-Rich Loss. Let's look at a scenario you know too well. Here is your A+ setup. Everything lines up. Your heart rate starts to climb. It's perfect. But wait. What if the 15-minute time frame isn't aligned? What if that news candle from 3 hours ago created a hidden resistance? I'll wait for a slightly better entry. The price hits your entry. You hesitate. It moves 10 pips in your direction. Now you feel the FOMO. You jump in late. Your stop loss is now wider than it should be. The price pulls back, which is normal. But because your entry was bad and your ego is high, you panic. You close the trade for a small loss. 5 minutes later, the price skyrockets to your original take profit. You were rich in knowledge. You predicted the move perfectly. But you are poor in money because you couldn't handle the uncertainty of the execution. You are fighting a war between your logical brain and your survival brain. Part 4. The Identity Crisis. This phase is painful because it creates an identity crisis. You start to feel like a fraud. You talk to your friends about the macroeconomic shift and liquidity sweeps, and you sound like a genius. But then you go home and struggle to pay for dinner with trading profits. This is where most traders quit. They think the strategy is broken, so they go back to the knowledge phase. They buy another course. They find a new holy grail indicator. Stop. The strategy isn't the problem. You are the problem. Or rather, your relationship with certainty is the problem. You are trying to use your knowledge to predict a future that is inherently unpredictable. You are trying to control the market when you should be controlling yourself. Part 5. Crossing the Bridge. The 3 Rituals. How do we cross the bridge? How do we turn that useless knowledge into actual capital? It requires 3 radical shifts in your daily ritual. 1. The 20-trade contract. From today, you are not allowed to change your strategy for 20 trades. Not a single setting. You are a robot. Your knowledge is now a set of rules, not a set of opinions. 2. The Psychology Journal. Stop journaling your entries and exits. Start journaling your emotions. Write down exactly what you felt at the moment of entry. Were you seeking revenge? Were you seeking validation? Knowledge is the what, but psychology is the how. 3. The Pay Yourself Rule. even if it's just $5. The moment you hit a profit target, withdraw a small percentage. You need to prove to your primitive brain that those numbers on the screen are real. You need to break the cycle of digital monopoly money. Part 6. The silent success. The transition from knowledge-rich to money-rich is surprisingly quiet. It doesn't come with a eureka moment. It comes when you realize that losing a trade doesn't make you wrong, and winning a trade doesn't make you a genius. It happens when trading becomes boring. If you are in the painful phase right now, listen to me. You are closer than you think. The pain you feel is the friction of your old self being stripped away. Stay the course. Stop studying the charts for a moment and start studying the person in the mirror. I want to hear from you. At what point did you realize your knowledge was actually getting in the way of your profit? Let's talk in the comments.